In this video, traders, I want to talk to you a little bit about summer trading. Stay tuned. Hey traders, warm welcome to you. All right, so we're in the thick of summer now. We are kind of mid-July when I'm filming this. And one of the things I've noticed in the last 20 odd years of being involved in the markets is that generally speaking, and it's a generalization, the summer is historically quiet. So what does that mean for traders? So somewhere late June up to August, that kind of period is generally quiet. So what does it mean and why is it quiet? So I think it's quiet because a lot of the people who are making decisions are away on holiday. They're away, they're doing stuff, the kids are off school, you've got House of Parliament, for example, they've got a big summer recess, various other countries do the same thing. Hedge fund managers who are allocating capital, some of the managers are away. No big meetings, but generally speaking, meetings tend to be pushed back. We're trying a meeting to decide where to allocate this capital. I'll do it next week because so-and-so's off. But then they're off. And so you have this delay of decisions to move capital around. Or you have a delay for some kind of government decision that might change the value of a company because of some legislation or whatever. You get the point. Big decisions tend to be, and again, generalizing, tend to be deferred until after the summer, when we start to get some spice, when we start to get some catalysts and this type of stuff. Not always, and again I keep saying this because I want to make sure that this is not always the case. We might have a crazy summer, and there are times when we've had a crazy summer. But generally speaking, you've got to watch out for it. And some of the things you've got to watch out for are volatility cycles. So normally you would have this cycle of volatility expanding, contracting, and it would be a bit more slower to contract again. So what I mean by this is if you had a good kind of move and a breakout, it would probably run for a bit and then it would kind of go quiet. Or intraday even, you'd have a kind of explosive move and it would maybe calm down a bit, then have another explosive move. It would be a bit more predictable, the volatility. Whereas in the summer, when liquidity is a little bit less, volume's a little bit less, higher time frames not as active because they're away, there's not many people to make these bigger decisions, we tend to get maybe spikes in volatility and still get movement, but it suddenly goes quiet. And so it's tricky sometimes to calibrate yourself to that expansion and contraction of volatility, even intraday or over a couple of days. So get intraday move, like, it's going to be running on today, and it just goes quiet. That's very common, that. Big move off the open, you're in there looking for a further extension because on normal circumstances, you get a pullback, a second drive, you get 2 bites of the cherry, you get this, you get that. You're looking for all your little parameters and indicators and tools, and then it just goes quiet. And it just sits there, and then maybe it drifts, and so you're like, kind of a bit stuck. So watch out for that. And the moves fizzle out quicker, exactly what I said at point 2. I didn't just write this, so I should think in my mind what I'm saying. But exactly that. The market moves and then it just goes, and it's like, what now? And very often it just sits there and sits there and sits there. And it could sit there for days, could sit there for hours, depending on what sort of time frame we're trading. Again, not necessarily saying it's going to do that, but be aware of that. And if that starts to happen, how will you combat that? Will you trade it? Will you not get involved with it? Will you step back? Will you be picky? This type of thing. So fewer setups, because of the nature of this spike and contraction volatility in this, you might still get moves from A to B. The percentage may be decent or not, or kind of pips may be decent, but there might be unusual way they move there. It's like, hey, it might move from A to B and it might look good, but if it's an unusual, erratic way, then and we can't capture it, then be absolutely comfortable with saying, hey, that doesn't move the way that I like it to move. It might sound a bit like, it's not moving the way you like it to move. How do you want it to move? Well, in a very specific manner, actually, because I'm not prepared to put my risk capital, or my capital at risk, should I say, unless it moves in the way that I want it to move. I'm just not going to get seduced by, big numbers. It's moving this amount, that amount. That's fine, but how is it doing it? If it's doing it in a way that I feel I can predict, or I feel like I've got a good chance of predicting correctly, then I might allocate risk capital to it. Otherwise, I'm not interested. So it's being that careful and structured about the way you operate. Market quieter earlier, so same type of thing in that it might get a bit of spice at the open and then just kind of sits there and sits there. And very often I find throughout the summer is you might get a couple of days of activity in the week and the rest of the week is calm and quiet. And again, it's hard to calibrate yourself sometimes to this. Not always. Some guys enjoy trading the summer and like this kind of different environment, but not for me. I think I prefer to step back, and definitely at the moment I'm very, very cautious and just watching, saying, hey, something's got to be really, really right for me to get heavily involved in stuff. So I could keep an eye on and what have you, but You've got to be careful, especially with day trade. You might have volatility on Monday and it goes quiet Tuesday, Wednesday, maybe a bit of volatility Thursday afternoon, and so you get this kind of not too much going on. It's a bit quieter earlier in the week, it's a bit quieter earlier in the day, just again because of the same reason. And the news is slow. News is slow because governments may be away, and I know at the moment I'm filming this, 2022, summer of 2022, we've got a lot of news happening, so this might not be the case this summer. We are starting to see it a little bit, I think, in the market, but it might be not quite as quiet because we've got lots of inflation data, we've got this interest rate cycles changing, we've got a war going on, we've got all sorts of stuff that can impact it, and that stuff's not going to stop just for the summer, so that's still going to be there. So maybe this one's going to be slightly different and not as quiet. However, people are still going away, people are making big decisions, still aren't necessarily at the desk, so it still applies. So it's not a prediction as such, and you shouldn't look at it and go, it's going to be very, very quiet, but it's a case of, okay, what are the telltale signs that this is changing conditions, and I need to either recalibrate and adjust or step back and let it kind of work its way through and then start to get involved towards the end of summer. That's a decision for you to make, but don't get frustrated as I would do in my early years. Like, I'm trying to get, why is it not? And treating the summer as like it's every other month of the year. It's not. It's a very distinct, different time. And you might have some volatility, we might have some action, we might have to be quiet, but it's a very, very different time to be a trader. But recognizing that, and if you're struggling with it, it's okay to step back. If it's still working for you and you're nailing stuff, then great, you keep pushing and pushing. But if you're not, then that's why. Often the rhythm and structure is very slightly different in summer. Take care, whatever you're doing, keep your risk managed. Bye-bye.